Hello, ladies and gentlemen. Good morning to you. I hope we all had a good night rest and we pumped up and ready for the New York session today. So before we start this, let's quickly confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get the session started. If you can see my screen and you can hear my voice clearly, type in hi in the comment section, please, so that we can get the session started. All right. Okay, so let's see what we have here. Okay, 8818. All right, 610. Okay, why 891 just spammed our comment section here. Okay, kindly contact the contact center to get a quick resolution on your complaint. Okay, all right, 610. All right, thank you. Cast, good morning to you. Should I take this as a confirmation that we are good to go? Can I see some more feedbacks, please, so that we can get this started? All right. I will assume that we are good to go this morning with a couple of comments I was able to see here. But if you have issues, let me know in the comment section as we go on with the live session. All right. Pleased to welcome you all to yet another promising session on the Extreme Speed. My name is Sheriff Daramola, and as usual, I will be your host for the next 1 hour. Where I will be reviewing the market with you using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you're welcome on board. I really appreciate your presence here as we continue to grow bigger. And what we simply do here on a daily basis, for the sake of those who are joining us for the first time, we gather here as a community, as a family, to review the financial market using technical parameters to identify trading opportunities lining up for us during the New York session. So we come here to take a position, and in fact we have a couple of pairs that we normally monitor on a daily basis. So we review how well those pairs have been doing so far for the week, and we shall be sharing ideas on what to expect going on from the current structure. So this is simply what we do here, and initially it might look a little bit complicated at first, but I assure you that it's quite simple. I've tried as much as possible to make things a little bit much more simple, and you will be able to benefit from this with time. So I advise you to stay tuned in, be part of the session throughout the session, and continue to join us on a daily basis, 10 a.m. UTC, so that you can be part of this, and with time you get to be able to make your independent decision using the informations that we have gathered here. So you're welcome on board once again. And with that being said, let's right into the current situation in the market. Well, as usual, before we go into the chart, remember we had a macroeconomic events that we were looking forward to yesterday. We had a couple of them, but the major one that we were looking forward to yesterday was the CPI. And in that regard, I was able to pull out do a summary of what to expect in the market based on the outcome of the fundamental events that came up yesterday. And this was what I was able to pull out. So let's quickly look through this, and this will help us to have a better perspective into what is going on behind the scenes, behind the price action we see on the chart. So the fundamental highlights here were, so we had shock waves from the Silicon Valley Bank's collapse, which triggered big moves in bank shares as investors panic over the financial health of banks, despite assurances from the US president and other global policymakers. So this is another dilemma for the US Federal Reserve, whose fighting against inflation has been complicated by the collapse of two regional banks. Now, yesterday, the consumer price index was released and data came in quite positive, a little bit positive, let me say here, as it rose about 0.4% last month after accelerating 0.5% in January. In the last 12 months, the CPI increased 6.0%, a slow pace than the 6.4% annualized gain in January, but still far off the Fed's 2% target for the inflation rate. So we are still trailing behind the Feds are still trailing behind as regards the inflation rate. So definitely there is a likelihood of a rate hike coming up next week. So with more than a week to go until the next FOMC meeting, a 25 basis rate hike is still a distinct possibility, as the latest development indicates is in financial stress. So these are the things that are happening behind the scenes on the fundamental perspective. And join me as we dive into the chart as we look at things from a technical standpoint to decipher what to look out for and what to expect in the coming days. So as usual, the first commodity we normally look at every day is the US oil and what is really going on the US oil for this week. And if you look at the current structure, this is the 1 hour time frame, and one thing we have observed and we have been able to be part of is this bearish momentum that started this week. Remember, at the beginning of the week, it was initially indecisive as we saw price action continue to range within a flat channel, just right within the $77.20 area and the $76.50 level to give us a level of indecision in that market at the start of the week. And you all know what we look out for whenever we have this kind of flat channel. We want to remain patient, look out for either a breakout of structure, that is the breakout of that resistant line, or the breakdown of structure for trading opportunities. So with our stop orders placed at both ends, we had our sell stop order triggered at the breakdown of the $76.50. That was early on Monday, and price action continued to move to the downside. And during the live session on Monday, I also identified a structure here at the $75 area, which was initially a buy zone a couple of days into the end of last week's trading session, and we said we want to be seeing how price action will be reacting to that $75 level to decide if we are going to be buying or selling the US oil. And in fact, it was a beautiful signal for us as we saw price action breach that support line, breaking down that $75 area to trigger another sell position in this market. And we were lucky enough to be part of this move all the way into the $72.50 level, where price action hit our TP target. So as at the first day of this week, we were already profitable on the US oil. Then we had this bullish momentum happen, which I also emphasized on Monday during our live session, where I said if we start seeing buy pressure around that area, we would want to be anticipating a bullish momentum. Though I wasn't part of this as I missed this opportunity, and for those who are taking advantage of that opportunity, it will have been a profitable trade for you guys. And one thing we observed following this impulse, this bullish move to the upside, it later turned out to be a retracement of that previous impulse leg that took over the market at the beginning of the week. And since then, price action had continued to find lower lows and lower highs. And to further emphasize the strength of the sellers in this particular market, we were able to connect a series of lower highs here, which resulted in the bearish trend line that you can see on my screen right now. And after connecting the lower highs, we have the bearish trend line, and it is quite obvious that price action had consistently and uniformly respected this bearish trend line since the beginning of the week. And one thing I stated here yesterday is the fact that we shall continue to use this bearish trend line as a yardstick for trading activity for this week. And what do I mean by that? As long as price action remains below the bearish trend line, this will be a beautiful situation for us to remain bearish in this particular market. So unless price action breaks above the trend line, we want to remain bearish as long as price remains below the structure. And something interesting happened during the later part of the New York session yesterday. Remember, we had a sell position to be triggered around this area yesterday, and we said a breakdown of the $72.50 level will definitely be welcoming additional position in this market. I will be sharing with you in a moment the importance of that $72.50 area, but for the sake of this one now, let's quickly talk through this. And what we saw here, as soon as price got into the $70.90 area, we started seeing some buy pressure resume again, which I'm of the opinion that this is more or less a retracement of that previous impulse leg that we had here. And price action came back into our entry zone at the $72.50 level, transition into a consolidation phase which appeared to have broken down the structure and has also triggered another sell position here. If you are part of this one too as well, well done to you for being on standby to have caught that move. So the next thing we want to be doing following the sell momentum we have been enjoying since the beginning of this week, we want to be securing the current position by moving our stop loss accordingly to secure this current position. And from this current structure here, I'm of the opinion that around the $72 area seems most appropriate to secure this current position as we wait out and see how price action will be playing out in the next couple of hours. Now, with the situation we have here on the 1 hour time frame, and for the sake of those who are not part of our live session prior to this one, let's quickly run through the daily time frame so that we can have an holistic perspective into what is really going on in this market, so that we can come back to the 1 hour time frame and make our decision for today. So in that regard, I will be scaling up into the daily time frame. So let's quickly run through this and see what is really going on from an holistic point of view, after which we shall be coming back into the daily time frame, into the 1 hour time frame, sorry. All right, so we are right on the daily time frame now, and this is what we saw. We have been seeing this structure for quite a while now. For those who have been part of the monitoring of the US oil commodity, and in fact we can see here that price action has been bearish, and in the last 7 to 8 months, throughout the second half of last year, we saw our price action has been finding lower highs, and when we connected a series of lower highs here, we have a bearish trend line which further emphasizes the strength of the sellers in this particular market. However, if you zoom into the current structure, that is what has been happening in this market in the last let's say 3-4 months, I think since the month of November, you will see that price action has been consolidating between the $83 level here, which has been serving as a strong supply zone, and the demand zone here at the $72 area. That is the range of that demand zone here. And in fact, this was the lowest point price has ever been in the last 1 year on the US oil. Now, with the situation we have here, price action caught within a channel, this further emphasizes that there is an indecision in this market, and we were of the opinion probably a couple of months ago that we might likely be seeing a rise in the demand for the oil, which might increase the price of oil. But so far so good. Price has been doing the opposite here, and I'm of the opinion that the fear of a recession in the US, and at the same time the inflation rate, is probably suppressing the price of the US oil. Now, with the situation of things, looking at the current structure here, and after connecting the series of higher lows, you can see that price action has been buyers have been trying to break out of this channel, but this has been negated by sellers. As you can see here, all attempt by the buyers to break out of this channel has been negated at every point in time to push price further to the downside. And what happened since the beginning of the week, as you all know, we have been witnessing bearish momentum, which later and yesterday broke down that bullish trend line to negate the bullish trend line here, And at this point, this is more or less looking like a bearish signal in this particular market. But we cannot jump into conclusion at this juncture in the market, as we cannot just say, oh, it's a bearish signal, let's just sell right away. No, we can't just do that. Remember, we are sitting right at the above a very strong demand zone, which has been existing for the last 4 to 5 months. So it's a very strong demand zone somewhere right above the $70 area. And right now, looking at what is happening in this market, price is currently approaching that demand zone. Not, in fact, it's within the demand zone right now, and anything could actually happen. So at this point in time, remember I told you on the 1 hour time frame, for those who already have a sell position running, I have told you to move your stop loss accordingly to secure your current position, as we might likely see a sudden reaction anytime soon, as we are within a strong zone that has a strength for buying power. So right now we are at a significant structure. We are at a key level here, right above the $70 level. Now the question for today is, are we going to be buying the US oil for today, or are we going to be selling the US oil? Now, one thing we want to be seeing to buy is if we start seeing buy pressure resume around this area on our lower time frame, then we might likely be thinking of buying the US oil. But for me, if we are buying in the short-term perspective, it is more likely to be a retracement phase at this point. As you all know, price action just broke down a key structure here. We had the first key structure at the $76 level, which was broken. Then yesterday's session, we saw the breakdown of that bullish trend line here to the downside. And we all know from a technical standpoint that whenever we have a significant breakdown of a key structure like this, we expect that one point in time, price is likely going to come back, do a retest of structure. It could be the retest of the bullish trend line, or in fact, it can go as far as the retest of the $76 area. But the most important pattern we want to be seeing here is selling pressure below the structure to incite another wave of bearish momentum to the downside. So this is one technical theory that is very likely to happen at this point. And if it so happens that price action climbs back above that structure, then we might be anticipating another wave of bullish momentum. Then another thing that could happen from this demand zone is that price action could turn out to transition into a trend continuation pattern. For example, a bearish rectangular pattern, breakdown retest on lower time frame to incite a trend continuation to the downside. So these are the things we are going to be looking at when we scale down to the lower time frame. So we are going to be focusing on that area around the $71.50 level, which happens to be within that demand zone and right above that $70 level, which I told you earlier is the lowest point price action has ever been, at least in the last 1 year. So now, with the information we have gathered here on the 1 hour time on the daily time frame, let's scale down to a much more lower time frame to decipher what our next line of action will be for today. Now, scaling back down into the 1 hour time frame, so we shall be zooming our attention into the $71.50 level to see how price action will be reacting to that structure. And let me zoom this out a little bit so that we can see things more clearly here. So remember, we have this bearish trend line, which has been supporting bearish momentum to the downside since the beginning of the week. So going forward, going on into the New York session today, we are going to be using this trend line as a yardstick for trading activities for today. So what this simply means is that if price action continues to trade below the trend line today, we shall feel comfortable in our sell position. However, a breakout of the trend line to the upside has a high chance of inciting a bullish momentum in this market. Remember that above the $72.50 level has been a strong demand zone in the last couple of months. So that's why we are going to be using this bearish trend line as our yardstick for trading activity. Now, when we scale down to a much more lower time frame, we begin to see things more clearly around the structure. So during the early hours of today, I was able to identify a simple setup here on the 15 minutes time frame. So let us look at the 15 minutes time frame together and zoom into the current structure. So that is the bearish trend line we identified on the 1 hour time frame. And look at what happened as soon as price came into the structure that was broken yesterday. That is the $72.50 level. Remember, price action was caught within a channel. And you all know what we look out for whenever we have this kind of channel. We want to see price action do a breakout, retest of structure on our lower time frame to join either a buy opportunity or a sell opportunity. And with the situation here, price action, the structure also shares a beautiful confluence with our bearish trend line. So this is more or less a sign that price might continue to the downside here. So a sell stop order below the $72.20 area triggered a sell position in this market, and since then price has been dropping to the downside. And in fact, we have about how many pips in profit from this level? About 70 pips in profit from this area. Please, I told you, for those who are in the sell position, ensure you've moved your stop loss to break even or probably lock in some profit, probably around the $72 level, as I have suggested, as we want to see how price action will be reacting to the structure. And I remember that we are sitting right within a strong demand zone, which we identified on the daily time frame. So right now we identified a structure at the $71.50 level, where we said we are going to be focusing on for today. Remember that structure, that price action was trading around the $71.50 level on our daily time frame. So I want us to zoom in and map out that price level so that we can position ourselves in such a way that we can catch any trading opportunity if we can identify a tradable setup at around this level. So for the sake of clarity, let us label this. So we have the $71.50 level. So that is already clarified there. Now we want to see how price action is going to be reacting to the $71.50 level to incite a trading opportunity in this market. So one of the two things we could see from the structure is buy pressure could resume in such a way that price comes back to do a retest of the $72.20 level, which was broken during the early hours of today, or retest of the bearish trend line, which has been supporting bearish momentum since the beginning of the week, to incite another wave of bearish momentum. Or we could have a situation where a trend continuation pattern around this area could lead to the breakdown retest of the $71.50 level to incite another wave of bearish momentum to the downside. So this is what we shall be looking forward to in the next couple of hours to see how price action will be reacting to the structure. And if you could afford to risk a stop loss of about, let me see, a stop loss of about 70 pips, because if you want to be taking any trade around this area, you want your stop loss to be somewhere right above the $72.25 level. So if you can afford to risk around $75 stop loss on this one, then you might want to be having your sell stop order below the $71.45 level, just right below the $71.50 area here, to trigger another wave of bearish momentum to the downside. So these are one of the things that we want to be looking out for at this current market structure to decide buying or selling at this point. Then another structure we also need to take into consideration here is this level, which is the lowest point price has ever been for this week, and that is the, let's see, $70.90 level. So I will label that area for the sake of clarity. So we have the $70.90 level here as well, which also has a potential of breaking to the downside. If it so happens that we have price action break down that structure, then we definitely want to be adding more position to our existing trade. So let's see what happens in the next couple of hours on this one. So let's see how that plays out on this one. If you have questions, feel free to drop your inquiries in the comment section. And whatever happens around the $70.90 area, if price action goes that far, will be determining what will be happening during the later part of this week. So if buy pressure resumes above the $70.90 area, we might be seeing a bullish momentum, and a breakdown retest of that structure will be welcoming a sell continuation to the downside. So let's be on standby for all these opportunities that we just identified here. Now going back into the 1 hour time frame, so one thing I always like doing is that I always take into consideration the two perspectives in the market. So if we are focusing on one part, the possibilities of the contrary happen is also there. And in the market is a fluid environment, and as traders, to make money off the market, we need to be as fluid as possible so that we can line up with the expectations of the market. So in as much as we are looking out for selling opportunities in this market, we cannot ignore the possibility that buyers could actually come in. And to what are we going to be looking forward to? What are we going to be seeing here to assure us that buyers have finally come into this market? So like I said earlier, I told you all that we have a key indicator here, which is the bearish trend line that we said we shall be using to guide trading activities for today. And I told you that as long as price remain below the bearish trend line, we shall feel comfortable in our sell position. However, if it so happens that price action breaks out of the trend line, and look at the trend line there, it also shares a beautiful confluence with that $72.50 level. That is the demand platform that we identified earlier on the daily time frame. So if a breakout of the trend line happens at this point, that is, price breaches the trend line, then this will be a signal that the trend line may no longer have the capacity to continue to hold that bearish momentum. And remember that we are not going to be jumping right away into that structure. If that happens, we want to see some confirmation to give us that leverage to join that rally. So we want to see a retest of structure. It could be the retest of the trend line or the retest of the $72.50 level by pressure above the structure on our lower time frame, after which we can join a bullish momentum to the upside. So this is what we are going to be seeing here to ever think of buying the US oil. So at this moment, I'm still holding on to a bearish bias, and I'm thinking price might likely go for the breaking down that $70.90 level. But if the contrary happens, where price action takes us out of the sell position we are in right now, break out of the trend line, then we want to be getting ready to buy. If you have questions, feel free to drop your inquiries in the comment section, and I hope you have screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So moving on to the next commodity for today, the next option we are going to be treating for today is the US tech. And on the US tech, I told you how the US tech has been very, very choppy since the beginning of the week, and for the first 36 hours on this market, we were not able to make any significant trade in this market. And during the live session yesterday, we were around here. During the live session, we were around the $12,000 mark area, just right below that structure there. And one thing we said during the live session is that we need some significant confirmation to give us that leverage to join any trading opportunity here. And I also shared something to you here on the 4 hours time frame, where I laid emphasis on the importance of the 11,800 level. Hold on a second, let's quickly run through that so that you can see what I'm talking about here. My trend lines here keep getting tampered with, I don't know why, so I will have to do some readjustment here. Okay, I think I'll use this one so we have the major trend line. Okay, so if we look at what has been happening in this market in the last 1 month, that is since the beginning of the month of February, you will see that though we have a bearish momentum in this market after connecting the series of lower highs here since the beginning of the month of February. In fact, I have a couple of trend lines to further emphasize the strength of the sellers in this particular market. Despite the lower highs in this market, something interesting is noticed on this current structure, and that is the $11,800 level. So despite the fact that we have been seeing lower highs in this market, price is yet to find a lower low. As you can see, every attempt by the sellers to break down the 11,800 level has been met with buying pressure, negating all attempts by the sellers to break down the structure. And this lasted for the whole of the month of February, even to as far back into this second week of this month. And now during the course of last week trading session too as well, okay, during the first day of this week too as well, we saw the sharp rejection of the 11,800. And what does this tell us in this market? It simply tells us that buyers are very, very strong at this particular area, and for them to have held on, negating selling pressure in this market for quite a long time, it's a sign that buyers are still very strong at this point. So thinking of selling the US tech at this point right above this structure doesn't seem reasonable around this area. So because of this situation we saw during the live session yesterday, we decided to look out for buying opportunity at the breakout of the bearish trend line here, because if a breakout of the trend line happens, it will be a beautiful signal that the trend line may no longer be strong enough to continue to hold bearish momentum. And with a further breakout of the major one here, we'll definitely be welcoming additional position at this point. So in that regard, we position ourselves right above the $12,000 level. Let me show you where that is on the 1 hour time frame. So this is what we saw on the 1 hour time frame here. Let me extend out the $12,000 level, a very strong psychological area considering the round figure of that price. And coupled with the bullish trend line here, so we saw this bullish trend line after price action tested 11,800 here. That was on Monday morning. We saw this happen on Monday morning too as well. So we had connected a series of higher lows here, which gave us this bullish trend line, which in the meantime I will be calling a temporary one. Now, during the live session yesterday, I told us also to have a buy stop order above the 12,000 area with the hopes that price action will be breaking out of that structure. And if it does break out, we have a position triggered. I also said yesterday that we should have a buy stop order above the 12,100, where a breakout of that structure will definitely welcome additional position in this market. And this was exactly what happened. We saw price action break out of the $12,000 level. We saw another breakout of the 12,100. In fact, it came back to do a retest of structure, and boom, price action moved about. Let's see, for the first position, price action moved over 230 pips in our favor, and for the second position, price action moved about 150 pips in our favor. And for those who are taking advantage of these opportunities yesterday, well done to you guys for being on standby to have caught that move. And I hope you moved your stop loss accordingly as price action moved significantly well, like I said yesterday. So that was what happened during the New York session yesterday. Now, as soon as price got into the 12,240 level, this is what we saw. So since the early hours of today, we started seeing multiple rejection of the 12,240, which was a sign that sellers are trying to negate all bullish attempts in this market. So we had a beautiful channel here between the 12,240 and the 12,170 area, and you all know what we look out for whenever we have this kind of channel. We want to see price action do a breakout or breakdown of the channel for trading opportunity. I just hope you are able to identify the setup this morning, and as a result of this, a buy stop order sitting above the 12,240 with the hopes that price will break out of that structure, and with a sell stop order sitting below the 12,170, we saw this position triggered, and price action has been moving in our favor in about 120 pips in profit. And for those who are taking advantage of this opportunity, well done to you for being on standby to have caught that move at this point. So the next thing we want to be doing right now, if you have caught that sell position at the 12,170 area, the next thing you want to be doing right now is to secure this current position, as we hope that price action might reverse or do a sudden pullback. So we want to secure the current position just in case a sudden pullback happens. And to secure this current position, I will be suggesting an area right around the 12,150 to secure this current position, as price action is currently approaching another key structure which we identified yesterday as a yardstick for trading activity for this week, and that is the bullish trend line here. Remember, we connected a series of higher lows here to give us this bullish trend line, and price action appears to be approaching that bullish trend line at this point. Now, with the breakdown of the 12,100 level, we might likely be seeing a bearish momentum to the downside, but we cannot jump into conclusion as we need to see how price action will be reacting to this trend line to decipher or to decide if we are going to be buying or going to be adding more position to our sell position. So now what we want to be doing, like I said, secure your current position, and we want to be patient enough to wait and see how price action will be reacting to the structure to decide what our next line of action will be. Now, the situation here has a high chance of going to the downside. That is, if the bullish trend line is broken, then we might likely see a situation where a retest of structure followed by sudden pressure right below the 12,100 area will be inciting another wave of bearish momentum to the downside. So this is what I will be looking forward to adding more position to this existing sell position that we have here. So for those who had missed out on the sell stop order at the 12,170 this morning, well, let's see if the market is going to be giving us a second chance in the form of a breakdown retest of this bullish trend line to add more position or to join outrightly if you had missed out on that one. So we have a key structure here within the 12,100 and the $12,000 area. We want to be seeing certain pressure around this area to continue to join that bearish momentum to the downside. However, if a bullish momentum comes in here, that is, if we start seeing buy pressure around this area continuing in such a way that price is finding it very difficult to break down the $12,000 area, then this might likely turn out to be a price action leading into a bullish momentum here. So if that happens, I want to be having a buy stop order above the 12,100 with the hopes that price action will continue to the upside. Now, if you are taking an opportunity, if you are taking this buy opportunity, that is after sighting, please note this: if you are not seeing buy pressure here, we are not joining. We want to see buy pressure on our lower time frame. We could go to as far as the 15 minutes, 10 minutes, or 5 minutes time frame. Look out for buy pressure around that area. It could turn out to be a reversal pattern, probably a double top, double bottom structure, inverse head and shoulder pattern, whatever it is. If we sight that on a lower time frame, then we could have a buy stop order above the 12,100 and join that rally. Now, there's a catch about this. There's a caveat to the structure. If the buy opportunity finally happens above the 12,100 and price action continues to the upside, as soon as it gets into the 12,170, we want to be moving our stop loss to secure that buy position, as we need to see how price action will be reacting to the structure to determine if we are going to be adding more position to our buy trade or getting ready to sell. And the reason why that is simply simple. Look at this here. We have the breakdown of the structure, and we all know from a technical standpoint that price might likely come back to do a retest of that structure. So if it comes back and we start seeing sudden pressure here, then this turns out that this impulsive bearish move has become valid here, and there is a high chance that we could be having a breakdown of the 12,100. So this is what we shall be looking out for when we buy above the 12,100 here. And if it so happens that price action continues to the upside, breaking out of the structure, then we want to be anticipating additional position in that regard. But at this point in time, I'm still tending towards a bearish momentum in this market, and I hope that price action will continue to the downside in such a way that it will break down the $11,800 area to the downside. And we also want to be anticipating additional position at that area. So that is my view here on the US tech for today. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we shall be looking at this morning is the GBPUSD, and in fact we already have a sell position triggered on the GBPUSD, and price action is massively moving in our direction. So let's quickly run through what our expectations were during the live session yesterday. What did we see here since the beginning of the week before we made the decision we made at the beginning of the week? So at the beginning of the week here, we saw a simple flat channel as usual that we have been seeing so far in most of the dollar pairs, and it was around the 1.21050 level. This was the resistance level at the beginning of the week where we started seeing selling pressure. Then this was where price action started the week. It started the week at around the 1.20350 level. So this was our support line initially at the beginning of the week where we started seeing buy pressure resume in this market. Then the appearance of this engulfing candle breaking through the resistance line at the 1.2050 level was that beautiful sign we were waiting for, a buying opportunity. So following the breakout of that structure, we saw a retracement back into the structure at the 1.20750 zone. And I told you here on Monday, it was exactly during the live session on Monday, I told you here that we want to be looking out for reversal patterns around this area, where the 1.20750 was serving as the neckline of that reversal pattern. We want to be joining a bullish momentum from that area, and in fact we had a buy stop order above that level. Price action triggered our buy position around here. Then we also had another buy stop above the 1.21050 level, which triggered our second position in this market. And since then, that's since Monday, we had our first position run about over 120 pips in our direction. Then we also had a second position here run with over 90 pips in our favor. So we were able to scoop over 200 pips at the beginning of the week. So as at Tuesday morning, we were already profitable in this market. And for those who are in this trade yesterday, I told us all that we want to be moving our stop loss on all buy positions to secure our current position right below the 1.21450. As you can see here, in the last 48 hours, we saw our buy pressure resumed around this area. Now, there was one thing I told you yesterday about the current structure. I told you that the trend line here will continue to guide our trading activity for this week. And that simply means that if price action continues to trade above that bullish trend line, we shall feel comfortable in our buy position. So because of the situation, we had our stop loss below the structure with the hopes that price action will break out of the 1.2200 level to trigger another buy position in this market. But in the last 24 hours in this market, you can see that price was not even close to that resistance line at the 1.2200 level, which further emphasizes the strength of the sellers in this particular market. And I told you yesterday that a breakdown of the trend line, of the bullish trend line, will definitely be triggering a selling opportunity in this market. And I told you that we are not jumping right away. We want to see the breakdown of the trend line first of all, a retest of structure, after which we want to be having our sell stop order below the 1.21450 level to join that decline to the downside. And this is exactly what has happened since the beginning of, I think in the last couple of hours now. We finally saw our sell stop order triggered at the 1.21450, and then we had another position triggered at the 1.21050 level. So well done to everyone who has been part of this trade, as we are currently running with about how many pips in profit right now. So the first position is running with about 78, close to 80 pips on that one, and the second position right now is running with about 36, close to about 40 pips on that one. So for everyone who have been part of this profitable one here, well done to you for being on standby to have caught that move. Now that we are heading into the New York session today, what is going to be our plans? What are our expectations in this market? And for those who had missed out on these opportunities, don't worry. Let's look out for more opportunities to add more position to our existing trade. So in anticipation of the New York session today, what are we going to be looking out for? What structures are we going to be using to guide our trading activities? Well, this is what I was able to find out here after examining price action in the last 24 hours. Now, if you look closely into that structure here, you will see that we have lower highs here. Price action has been finding lower highs since the rejection of the 1.220 level. And when we connect a series of lower highs here, we have a beautiful bearish trend line, which has been guiding the selling momentum to the downside. And following the breakdown of the bullish trend line, which is going to be the first time price action will be breaking down the bullish trend line in the last 3 to 4 days, it's a very important signal that we are going bearish in this market. Now, with the situation of things right now, we want to be using this bearish trend line as our yardstick for trading activities for today. So what this simply means is that if price action continues to trade below the bearish trend line here, we shall feel comfortable in our sell position. And please note that there's still a possibility that price action could still do some retest of structure. You know, we had a breakdown of structure here. There is still a high chance that price action might likely come back to do a retest of the 1.21450 level, or even the bearish trend line to incite another wave of bearish momentum to the downside. Another thing that could also happen if a retest of a retracement happens here is price action could come back into the 1.2050 level to incite a trend continuation. So now that we have this information in mind, what do we look out for to sell if it so happens that we start seeing retracement back to the upside? Well, what we want to see is quite simple. If it happens the price action comes back into the 1.21450, what we want to be looking out for is selling pressure, that is price action rejecting that structure. That is, buyers are trying to break out of that level, but they find it very, very difficult to break out of that structure, which will definitely emphasize the strength of the sellers in that market. So we want to be seeing rejection around that area. It could be a shooting star candle, it could be a reversal pattern. Whatever is it that confirms that buyers are finding difficult to break out of that structure will definitely welcome an additional sell position. So if you had missed out on this first opportunity, it will be a beautiful opportunity to join again in this market. And if price does not go that far but instead comes back into the 1.21050 level, which was initially our resistance line at the beginning of the week, remember this was a strong selling niche at the beginning of the week. So if it so comes back into that area and we start seeing that same rejection, shooting star candle, reversal pattern around that area on our lower time frame, then definitely it will be a beautiful opportunity to join the breakdown retest of that structure to the downside. So these are the things we shall be looking forward to as we head into the New York session today. So I hope that we'll be on standby, especially for those who had missed out on this current opportunity that we are in right now. Now there is a catch to this current structure here, and that has to do with the 1.20350 level. And the reason why I said there is a catch to this is this. Now if we look at the structure here since the beginning of the week, you would notice that this is where price action started this week. That is the 1.20350 level. So this is where people saw it cheap enough to buy the GBPUSD at the beginning of the week. So it might likely happen because of the memory for buying power around this area. It is very likely that if price action comes back into that area, we might likely be seeing some buy pressure resume around that area. So what I want us to be doing as soon as price gets into the 1.20350 level is to secure our current sell position by moving our stop loss accordingly to secure the current position. You could move your stop loss to somewhere right around the 1.20750. As soon as price gets here, just move your stop loss to somewhere above that structure at the 1.20750 so that we can give room for price action to breathe. Then if we start seeing buy pressure resume from that area, then we might likely be seeing that retracement phase I was talking about earlier, probably into the 1.21050 level or the 1.21450 level, which also shares a confluence with that bearish trend line to incite another wave of bearish momentum to the downside. So if you are a counter trend trader, you are a scalper, you might want to take advantage of that reversal pattern. But if you are not, you don't feel comfortable taking counter trend opportunity, or you're not a scalper, please leave it alone and wait for that price action to come into this bus stop where we want to be doing a trend continuation to the downside. However, if it so happens that price action breaks down the 1.20350 level, then definitely we want to be adding more position to our existing trade, as we want to be riding the move all the way down, taking advantage of key structures like the 1.200 level to add more position to our existing trade. So these are my views here on the GBPUSD for today. I hope I made myself clear. You might also want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. So that is that on the GBPUSD. So I will be moving on to the next pair, and the next pair we shall be looking at is the XAUUSD. I have less than 5 minutes left. So let's quickly run through this and see where we are going for today. Okay. All right, so this is the XAUUSD 1 hour time frame, and we bought the XAUUSD at the beginning of the week, and the reason why we bought the XAUUSD was simply because of this structure here. Though the goals started the week on the bullish note here, we saw our price action started the week at the 1869 level. Then we saw this huge engulfing candle taking price into the 1,895. And as soon as price got into the 1,895, we started seeing selling pressure from that area, negating all bullish attempt, bringing price back down to the downside, hereby making us see a channel between the 1,895 and the 1,869. And with that kind of situation there, you all know what we look out for whenever we sight this kind of situation. We look out for either a breakout of the channel to the upside for buying opportunity, or a breakdown of the channel to the downside for selling opportunity. So with a buy stop order and sell stop order placed at both ends respectively, we expected one of this position to be triggered, and fortunately for us, the buy position was triggered during the New York session on Monday. We saw the breakout, we saw the retest of structure, and boom, price action moved significantly well in our favor. In fact, it moved over 2,100 pips in our favor before we started witnessing the sell pressure that resumed at around the $1,915 level. Now look at what has been happening here in the last 72 hours. You can see that since Monday morning, okay, I think since the New York Monday morning, I think, how am I going to put, okay, New York morning session, yes, all right, the New York morning session on Monday, we saw our price action was caught within the channel between the 1,904 and the 1,915, which further emphasizes the indecision in this market. And with that kind of situation here yesterday, I told us all to move our stop loss probably to your entry point, or move it to somewhere right around the 1,899 level. But I think during the New York session yesterday, we were taken out of all sell position. Okay, I think we were taken out of all sell position prior to the New York session, prior to our live session yesterday. And I told you here that I had a sell position trigger. I can remember now. All right. So we had a sell position trigger right here during the live session yesterday. This was where we were doing the live session, where we had a sell position triggered after noticing the breakdown of the 1,904. And one thing I stated here is that this might likely turn out to be a reversal pattern in the form of a double top structure, the breakdown of that neckline area here, retest of structure to join that decline to the downside. So because of that, we had our sell stop triggered here, and I hope you are part of it yesterday. And price action traded within the red zone here for about 10 hours before, during the early hours of today, we saw price action come back into the positive zone right below the 1,904 level. So you see how this happened in the last 10, 12, 15 hours now. Price action has been a little bit bearish anyways. So during the early hours of today, what I did was to connect a series of lower highs, as price action has been bearish for the last 15 hours or so. I connected the bearish trend line here, and what I decided to do is that the trend line here shall be our yardstick for trading activity for today. So what this simply means is that if price action continues to trade below the bearish trend line, we shall feel comfortable in our sell position. And in fact, since the breakdown of the 1,904 level yesterday, we saw price action moved about 1,700 pips in our favor before this bullish momentum came in. And I hope you moved your stop loss accordingly to secure your position, or probably you must have taken some profit off that price movement before the bullish momentum came in. And if you have done that, well done to you. And if you are not done that, the worst case scenario you'll be having here is a break even. That is, you neither made profit, neither did you make any loss on this one. So now with the current situation we have right now, it appears that price action has broken out of our bearish trend line here. So will this turn out to be a momentum shift in this market? That's a very big question we are going to be answering at this particular point in time. So now with the situation we have right now, this candle is still running here, so we cannot make a decision based on a running candle. So we need this candle to close before thinking of making any decision, and this candle has about 2 minutes left for it to close. So we could still see this candle turn out to be a shooting star candle, dropping back below the bearish trend line. So in this kind of situation here, I will be advising that let's have our sell stop order again below the 1,904, with the hopes that this bullish trend line will turn out to be a false breakout. And if that is going to be the case, we want to be having our sell stop order triggered below the structure, price action drop to the downside, And if it continues in such a way that selling pressure resumes below the 1,904, then another sell stop order below the 1,895 should be welcoming additional position in this trade. So let's see how far this bearish momentum will go if that is going to be the case here. However, if this candle turns out to close right above the 1,904, breaking out of that bearish trend line, then that will likely be a sign that the trend line may no longer be strong enough to hold that bearish momentum. And if this happens, I want to see further confirmation, as we are not joining this bullish move right away. We still need some further confirmations to really be sure that price action is actually going to be bullish above the bearish trend line. So we want to be seeing something like a retest of structure, that is price action coming back into the 1,904 or the bearish trend line, where we look out for buying pressure. Remember, right above the 1,904 level to give us that confirmation that we are actually going bullish on this one. If this does not happen, we are not going to be selling, we are not going to be buying. So I told you that I'm having a sell stop order below the 1,904 with the hopes that price action will drop to the downside. But if we start seeing buy pressure above the 1,904, reversal patterns on our 15 minutes time frame, then definitely we want to be joining a rally to the upside. Then if a further breakout of the 1,915 happens, we want to be adding more position to our buy position. But personally, for me, looking at what has been happening here in the last 24-48 hours, I'm still tending towards a bearish momentum in this market, and I'm looking forward to setting opportunities just right below the 1,904 level. I hope I made myself clear on the XAUUSD. If you do have questions, feel free to drop your inquiries in the comment section. All right. Okay. So let's move on to talk about the last pair for today, which is the USDJPY. And on the USDJPY, what is our expectations here? Well, during the course of yesterday's live session, we were buying the USDJPY. Remember, we bought it right above the 134.00 level, which has been a strong buying niche in the last 24 hours actually. So we bought above that level, and in fact price action moved since then, has moved about 100 pips in our favor before we started seeing this bearish momentum to the downside. And I hope that you moved your stop loss accordingly to secure that buy position before we were taking out of all this position. And remember what I told you yesterday about the current structure here, where I said that we want to be using this bullish trend line as a yardstick for trading activity for yesterday. So we had this trend line figured out yesterday after connecting the series of higher lows, and we said as long as price remain above that bullish trend line, we shall feel comfortable in our buy position. But what you can see now in the last couple of hours right now, we have seen the breakdown of the trend line here, which was a beautiful signal that we are having a momentum shift. And in fact, price action came back to do a retest of structure on our lower time frame. Let me scale down to the 15 minutes time frame here. Hold on a second. So we had we had the breakdown retest, or you can see it here. We had the breakdown retest of the 135.250 level to trigger a sell position in that regard. And if you are taking advantage of that one, kudos to you, as you will currently be running with about 60 pips in profit. Now, with the situation of things right now, what is going to be our expectation? Will this sell momentum continue to the downside, or are we going to be seeing this as a false breakdown, which might likely incite another wave of bullish momentum to the upside? So in order to have a better perspective into what is really going on here, I would like us to scale up a little bit to a much more higher time frame to see what is really going on in this market, after which we shall be coming back down to make a decision for today. So in that regard, let me first of all scale up into the 4 hours time frame. Let's see what is going on here on the 4 hours time frame. Now look at the structure we have on the 4 hours time frame, and look at what has been happening here since the second week of the month of January. Now we have a situation here where it is quite obvious that price action has been bullish for the last 3 months thereabout. And to further emphasize the strength of the buyers in this market, you can see how price action has transitioned into this beautiful ascending channel I was able to identify here. after connecting the series of higher lows and higher highs. Now, I laid much emphasis on this current structure here at around the 134.00 level, which happens to share a confluence with that support line of that ascending channel. Remember what we said about the structure on Monday, and we said we were at a critical point in time where anything could actually happen in such a way that we could have bullish momentum coming from that area where price action might likely respect that support line to incite another wave of bullish momentum. And if it happens that a breakdown of the support line happens, retest of structure will definitely be inciting a bearish momentum to the downside. And look at what has happened in this market in the last 3 days now. We saw the breakdown of the support line here, which is more or less a sign that we are going bearish on this one, and then price action has come back to do a retest of structure. As you can see here, price action came back, and since price action came in, climbed above the 134.00 level, it tested the 135.00 a couple of times. We had the first touch here, we had the second touch here, and it appears price is jumping down to the downside. So with the situation of things right now, it appears that we have a reversal pattern unfolding around between the 135.100 level and the 134.00 area, where the 134.00 area is likely going to be turning out to be the neckline of that reversal, the potential reversal pattern we are just seeing here. Now that price action has broken down the 134.00 level on the 4 hours time frame, we cannot jump into conclusion right now and call this a breakdown yet, because this is a 4 hours time frame and this candle still has about an hour 54 minutes left for it to mature. So what we want to be seeing here on from the 4 hours perspective is to wait out for this candle to close here so that we can decide if price will be closing below the 134.00 level, and if it does close below that structure, then definitely we want to be seeing certain pressure below the 134.00 level on our lower time frame to emphasize the strength of the sellers in this particular market. However, if price action close above the 134.00 level, then it could turn out to be an anticipation of another wave of bullish momentum where price was unable to break the previous low here at the 132.300 level. So if this turns out to be an area where price is finding it very difficult to break down off, and price comes back up to the upside above the 134.00 area, then definitely we should be anticipating a bullish momentum. So at this point, we are at a critical point in this market, so we need to be very, very, very careful at this point. And for those who had sold at the breakdown, because some of us will have sold here, well, if you had sold at this point, I will be advising you to move your stop loss to secure your current position, as anything is still possible to happen in this particular market. Now, with the information we have gathered here on the 4 hours time frame, I want us to scale back down into the 1 hour time frame, where we want to see how this week price action has reacted to this week. And one thing, before I go down into the 1 hour time frame, remember at the beginning of the week we had this channel figured out. We had the resistance level for this week fell at the 135.100 area, so that's the highest point price has ever been for this week. And the support line for this week was at the 135.600, where we saw the breakdown of the structure. We never saw the retest of that structure as price action climbed to the upside. And right now, price is currently trading around the 135.600 level, which makes this area a critical area that we need to understand and see how price action reacts to this level to decide what our next line of action will be. So right now, we shall be scaling back down into the 1 hour time frame so that we can see how price action is reacting to the 135.600 to decide what our next line of action will be at this point. So right now, we are the 1 hour time frame right now. Price has broken down that bullish trend line we identified at the beginning of the week. So are we going to be seeing price action come back to do a retest of that trend line, or the 135.250, or in fact the 134.00 area? Well, the most important thing we want to be seeing if price action comes into any of the structure is to start seeing reversal patterns around this area for us to give us a confirmation to sell the USDJPY. However, if we start seeing a trend continuation pattern around this area where price action breaks down the structure to the downside, then definitely we want to be joining that sell momentum right away from that area. So whatever position we are having here, our stop loss should not exceed the resistant line here, the 135.100 area. Sorry, the 134.700 area here, which will be dovetailing to, if you are joining from this area, if you can afford a 100 pip stop loss, well, you could take advantage of that. But if you can't, I would suggest you hold on and let's see how price action will be reacting to this level. If it comes back a little back into the 135.250, then this will be safe enough, as the stop loss will have reduced significantly well in anticipation of the bearish momentum to the downside. So on the USDJPY for today, I'm tending towards a sell momentum here. I'm tending towards a bearish momentum on this one, as we finally saw the breakdown of that bullish trend line. However, in as much as we look out for selling opportunities here, we cannot ignore the possibilities that buyers could come into as well. And for me to be buying the USDJPY for today, I want to see price action climb above this bullish trend line one more time, gain its bullish momentum right above the structure before I can join that rally to the upside. So what I want to be seeing is price breaking above the 134.700, something like this, which I doubt if it will happen. I doubt it if it will happen. That is, break above the 134.700 level to give me that leverage to join that rally to the upside. So that is the only reason why I will be thinking of buying the USDJPY for today. So let's see how price action plays out. Then another thing I would also want to let us look at here is this 135.600 area. We should go back to the structure. It's a very critical level here. If you go to the past, you saw how that level also was our support line at the beginning of the week. We saw the breakdown of the support line. Price was unable to retest structure as price continued to find higher highs from that area. And if we look at the breakdown of that support line here at the beginning of the week, you can see that price action transition into a reversal pattern in the form of a double bottom structure. So the 135.600 was initially the neckline of that reversal pattern. As you can see here, price retested the structure and since then has been going to the upside. But one thing for sure, we have seen price come back into the structure here. How are we going to be seeing buy pressure around this area? If we do see buy pressure around this area, maybe the double bottom structure, head and shoulder pattern, I'm of the opinion that the 134.00 level could turn out to be the neckline of that reversal pattern. And in fact, we could join early enough. We could join the bullish move early enough if we do see a breakout retest of the 134.00 level to the upside. Mind you, this breakout could turn out to be a retracement, but we could still join it anyways, as considering the bullish momentum here, we could still join that move to the upside. And if price action gets into any of the structure between the 134.700 and the 135.250, which also shares a confluence with the support line of this channel here, we want to be moving our stop loss accordingly to secure the buy position, as whatever happens around here will determine if we are going to be buying or selling. So if we start seeing certain pressure resume below the structure on our lower time frame, then definitely this is a retest of structure to incite another wave of bearish momentum to the downside. But if price action breaks above the 134.700 with buy pressure resuming above that structure, it will be a beautiful opportunity to join a trend continuation to the upside. So these are my views here on the USDJPY. So I hope that we'll be on standby to catch any of these opportunities as market evolves in front of our highs. So these are my views on the USDJPY. If you have questions, feel free to drop your inquiries in the comment section. So I will be going on to do a quick recap of what we talked about today for the sake of those who are not part of the beginning of the live session this morning. So the first commodity we looked at this morning is the US oil, and on the US oil we have been selling the US oil, and look at what has happened here. I hope you are part of this momentum as you had your sell stop orders triggered. Remember, price action has been moving massively well right now. So let's quickly run through this and see what is going on here. So price action has moved over 200 pips since the first position was triggered this morning. And look at the second position triggered here again. We had a second position triggered a sell stop order below the $71.50 level, and we also had another sell stop triggered at the $70.90 area. So currently you should be having a minimum of 2 to 3 positions running at this particular point in time. So price action has finally broken down the $70 level. That is the lowest point price has ever been in 1 year, and we might likely be having a crash from this point in time. So let's ensure that we have moved our stop loss. So all stop loss positions on all the sell positions we have here should be falling around the $70.90 area. So let's see what is going to be happening going forward. And for those who are asking for where the TP target is going to be on this one, let's quickly run through the daily time frame and see what to look out for in terms of our TP target with this current zone. And remember, that is the lowest point price has ever been in the last 1 year. As you can see, we already have a breakdown. Price action is currently testing the $70 area where price action has been the lowest in the last 1 year. So we never can tell, sincerely. You could have your TP target around the $69 area or the $68 area, and one thing you want to be doing is you move your stop loss accordingly to secure your position, as we really don't have a structure at this point to have a TP target hard. So you want to be moving your stop loss accordingly. You could extend your TP to around the 64, 65, whichever one that suits you. Move your stop loss accordingly to secure your position as you keep on monitoring price action. So that's what I can say here in terms of the TP target for the US oil. All right, so we're moving on to the US tech, and on the US tech as well, we had a sell position trigger this morning as we sold below the 12,170 level. And one thing I told you this morning is that we want to be seeing how price action will be reacting to this trend line to decide if we want to be adding more sell position to our existing sell position, or we want to be getting ready to buy at this point. So to buy the US tech here, we want to see buy pressure resume. We want to see something like a reversal pattern come in around this area where a breakout retest of the 12,100 will be inciting a bullish momentum in this market. But if price action continue to trade below the $12,000 level, definitely we want to be adding more position below that structure. Then a further breakdown of the 11,800 will definitely be sending a new wave of crash to the downside here. Remember that 11,800 has been a major determinant for buying power here in the last 1 month. I think 5 to 6 weeks here. It has been a strong buying niche in this market. Then we went on to talk about the GBPUSD. We also have a sell position running on the GBPUSD. In fact, we have 2 positions running right now. We have one up below the 1.21450 and below the 1.21050 level, and we are anticipating another breakdown of the 1.20350. Let's hope that will happen too as well. And for those who are still in this trade, I've told you to move your stop loss, and where we are moving our stop loss from this current position is around the 1.21050 area. And I told you that there is a likelihood that a retracement phase will happen sometime. We don't know when it's going to happen, so I want us to anticipate that one. It might likely happen if price action comes back into the support line. Remember, that is the support line for the week. This is where the week started for us. We started at around the 1.20350. So if we start seeing buying pressure around this area, we might likely see a retracement back into either the 1.21050 or the 1.21450, which also shares a confluence with the bearish trend line to incite another wave to the downside. So let's keep this in mind as well. But if the breakdown of structure happens, then selling pressure below this level on our lower time frame will be welcoming additional position on the GBPUSD. So that is that on the GBPUSD. Then we went on to talk about the XAUUSD as well. On the XAUUSD, I told you that I'm still expecting a bearish momentum here, despite the fact that we had a breakout of the bearish trend line here, and I'm of the opinion that this might turn out to be a false breakout. I might be wrong anyways, but one thing I said here, for me to confirm that this bullish trend line is valid, I want to see price action drop back into the 1,904 or retest of the bearish trend line, whereby pressure from our lower time frame will give me a confirmation that truly that breakout is valid. Then a further breakout of the 1,915 level will be welcoming additional position on the XAUUSD. However, I told you, supporting my bearish buyers on this one, I told you that a breakdown retest of the 1,904 will definitely be welcoming a sell position in this market, and a further breakdown of the 1,895 will be welcoming additional position in that regard. So let's be on standby for this opportunity. We have no open position yet right now, as we continue to monitor price action and see if a retest of structure will happen or a breakthrough of structure will be happening. So let's be on standby for that one too as well. Then we went on to close the day with the USDJPY, as price action has fallen back into an important structure which was serving as a support line for this market at the beginning of the week. And one thing about this current structure, despite the fact that we have this breakdown of the bullish trend line that was supposed to be our yardstick for trading activity, we might likely see buy pressure resume again from this area. It could come in the form of a reversal pattern, and I told you that the 134.00 level could turn out to be the neckline of this reversal pattern, where a breakout retest of that structure will be welcoming that buy position. But one thing I told you about this structure is that if we are going to be buying above the 134.00 level, we want to be very, very careful. As soon as price gets into structures like the 135.250 and the 134.700 level, you want to be moving your stop loss accordingly to secure your position, as this is more or less a counter trend opportunity. And remember, the 134.700 shares a confluence with that bullish trend line that was broken during the early hours of today, which could incite a bearish momentum to the downside. So that is why I have said that we should be moving our stop loss accordingly if price action ever breaks above the 134.00 level for buying opportunity. Then if a further breakout of the 135.100 level happen, then at that point we are going to be very, very comfortable in the buy position we have. However, a breakdown retest on our lower time frame of the 135.600 level will be welcoming additional sell position in this market. Then once again, congrats to those who took advantage of this bearish momentum at the breakdown retest of this bullish trend line this morning. So well done to you guys for being on standby. Ensure you move your stop loss accordingly to secure your current position, as we monitor how price action will be reacting to the 135.600 level to decide what our next line of action will be. And it's on this note I'm going to be calling it a day here. It has been a wonderful moment with us here during the live session, and I hope we are well equipped to be able to take on the market as soon as the New York session resumes, with all the possible simulations that we already have at the backs of our hands. So thank you for your attention, everyone. I do appreciate I do appreciate all of you. And I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review the market and get prepared for the New York session tomorrow. So do have a wonderful evening, everyone. I really appreciate, and best of luck today. Bye-bye.